Hey folks, welcome to Weekend Market Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. The update this week is for December 22nd, 2008 through December 26th, 2008. Now really what the weekend update, folks, is meant to really prepare you guys for the coming week based on technicals, economic news, earnings updates, all the stuff that you want to know about that's going to be coming out this week to really prepare yourself to trade it, invest it, swing trade it, whatever you prepare to do. Now, what you're looking at here, first of all, is the chart of really the start of the week and last Friday, or a week ago from Friday's market. And I'm going to do day-by-day updates looking at the technicals on the chart, the key levels, and then I want to expand the chart to the 60-minute, the 120, the 180, the 240, the 300-minute to get a bigger view. And what we like to do with InTheMoneyStocks.com is really focus on the pure technicals. We're not very fundamentally, where we hate the fundamentals, to be honest, and that's done so because they're just BS. I mean, let's face it. You looked a year ago at the fundamentals of these financial companies, and everyone would be buying. So again, you focus on the technicals. You throw out all the Wall Street hype. You join the research center at InTheMoneyStocks.com to really get all the key levels and the key turn dates, the pivot points, and you'll be fine in this market. You can navigate it with us, as we've been doing for 2 years now, to almost the day of every move in the markets. So in any case, folks, let's start out here by looking at what the markets did last week, and then we'll get into the charts after we talk about economic news and earnings news. Alright, so last week we saw a mixed week on Wall Street. We had the Fed coming out, we had some earnings coming out from Research in Motion, Oracle, Goldman Sachs, Morgan Stanley, and there was a bunch of little different economic news postings that came out last week, but ultimately it was a fairly flat week. We saw the Dow ending down about 0.6%, the S&P was up almost 1%, and the NASDAQ was up about 1.5% on the week. So you can see, considering all that data that was coming out, whether it was Research in Motion earnings, or Oracle, or Goldman Sachs, or Morgan Stanley, or the Fed, for the most part, the market was a mixed week. The Dow down, S&P and NASDAQ up, and really just basically flat across the board. For the most part. So that's the key here, folks. Looking this week at economic news and earnings news, you can see data includes this week existing home sales, new home sales for November, the government's third quarter gross domestic product report, and a reading on consumer sentiment for December. So there's a little bit of economic news. There's no earnings news of significance whatsoever this week. It's a very quiet week because you have the Christmas holiday, you have Thursday, the markets being closed, and you're going to really have a light volume week. We had the light volume last week already starting, but it's going to continue and get even lighter this week as a lot of the core traders, a lot of the big fund traders that we know, that we participate with and talk with and intertwine our trading life with, have already gone on vacation and just left kind of the students in charge of making sure the market does, they trade it appropriately and make sure nothing crazy happens. But for the most part, that's what you're getting here. All right, folks? So keep that in mind, is that it's going to be a very, very light week this week. But that doesn't mean you don't have to pay attention to the technicals and the technical levels, which is what I'm going to get into now. Now, what I'm showing you here again is, this is Monday, this is a week ago Friday. So we're talking about last Monday, and before that, the Friday. Now, the reason why I want to start here is because I want to go through the whole week, look at the key technicals, the key patterns in retrospect, and I want to remind everyone that if you join the Research Center, you get up-to-date info. This is going to kind of track the markets on the key levels going into this week and into the future, but if you want the key levels that we feel are the key ones to watch when we think the next rally or the next fall is going to come out, to the day, you want to really join the Research Center at InTheMoneyStocks.com. You obviously get key levels on gold, oil, and the dollar, as well as the S&P, and it's spot on accurate, folks. You can join it and see for yourself. But in any case, the other thing I wanted to point out, folks, is we have a webinar on January 3rd, Saturday, January 3rd. We're going to teach these technicals that we use, the proprietary stuff that we use, and it's real reason why we've been so accurate in calling the market and been ahead of every major Wall Street firm out there pretty much in calling what's happened in the market. Now here, guys, let's take a look at this chart. Now what I want to show you first of all is going back to a week ago Friday. This is the 12th, December 12th, right? Now what you're going to see here, I'm going to draw on a couple key levels, and I want to just really show you why the technicals are so key in this market. Number one, if we draw in this line here, folks, what you're going to see, and look, we're basically attaching the lows from these candles on a week ago from Friday, and I want to show you how that translates into Monday's analysis. Notice the lows, the lows, the lows, basically the lows all the way through. What do you get right off of this level on Monday when we start gapping up and falling back down? You get a bounce right off of that level, then it finally breaks, and what do we know about research? What do we know about support and resistance lines? Those of you that are with us in the intraday obviously know. Those in the research center know. We know that support, which is right here, you can see the mini bounce off of that, then it breaks, becomes resistance on the upside. Look at this little curvature right up into that resistance. Obviously, if you're tracking this market and have these lines drawn in your chart, and again, we can teach you how to find them in the key ones, obviously, that this becomes resistance on the upside. Notice how it kisses it right here, and it falls. And that's really what I wanted to point out here going back. So not only do you have a good sense of when you're going to get a small bounce, and it's really a minor bounce there, but you do get that green candle up, you know when the market's going to meet resistance again by tracking the lines from a week ago Friday into Monday. Now let's start scanning it forward, and let's see what else we can find out here. Alright, number one, you could take the lows from that Monday period, alright, let's stand back again and make that actually Fridays. And again, notice the lows over here where you're having the support, and you can extend them right here, and you get another key level. All right, there you go. So you take these lows here where you can see the market hit here, bounced, and retraced back and bounced off of it again to close higher. So you have this low put in on 2 points, and you track it, and you get a new point of support. Alright, so all of a sudden you have the market coming down. You know you're going to come into support, because if you draw a straight line right through here, that becomes support. Now, all of a sudden you bounce off that support, and that brings it up here. So now you've basically tracked this bounce, and this resistance shorting opportunity in the market. Okay, so then you're coming back off this resistance point right here down to the lows, and you break it. Well, those of us that have been trading with us for a while know that we wait for confirmation, because amateurs will end up shorting this, and that's not a good thing. All right, amateurs, beginners will say, okay, it just broke this low, let's go short. Well, what do we need? We need the confirmation. What is a confirmation? We get it as a breakdown point from the close below, meaning we need a new breakdown point in the next candle. Notice you never get that here. Okay, you never get that here. Instead, you rally back up, close above. So anyone that tried to short it on that close below is wrong, and obviously we would have been waiting on that and seeing that, and you get a bounce right back above that support line. Now, the next time you come through, you actually do get a break below it. The break below it happens right here in this candle, as you can see. Right at this point, you get a break of that low. At that point, you get a little bit of a fall. You can scalp that if you want. But the other thing you want to notice is, where do you come down to your next bouncing opportunity? All right. Notice the lows over here, folks. All right, you have a low here, a low here. The next bounce, where's it coming? Right here. So if you're shorting at that breakdown point, where are you going to cover? Right at that point. I mean, the charts can be choreographed to tell you exactly what's going to happen. I mean, I could spend the whole video on this back to back, but nonetheless, I just wanted to show you guys that. And then obviously you get the bounce back up, the gap higher, coming into Monday, and then Tuesday rally. Notice the bullish flag pattern here on the Fed. Beautiful bull flag for a breakout to the upside. Obviously, we talked about that in the intraday chat, and Research Center, we covered that as well. Scanning through to Wednesday, Thursday, and Friday, you can just continue to play the technicals. I mean, there are so many technical patterns here that it's just unbelievable. But I really wanted to focus on that because I want to show you the keys to this technical market. Now, again, if you want to play the technicals, notice the support line. All right, you know the low here on Thursday is going to be support on Friday. All right, as you come down here, so you can play the bounce right off of that level. Notice where the market closes, right at that level as well. So we're going into Monday right on that little support. We'll see if we gap lower or do we bounce off this support line, which as of now, the futures are up about 7.5 points. A lot can change, though, by Monday morning when the market starts trading. Now, I really want to focus on the 60-minute. Let's quickly flip to the 60-minute. And again, there's just not enough time in this video to do it, so I really do encourage you to all join the Research Center so you can get the longer length videos. But I want to just show you, look at the support you're on right here. I pointed out this on the intraday. Now you go on the 60-minute, look at that support. Alright, so you can see if you scan back and look at a larger time frame like the 60-minute, you're going to find even more key levels. And again, this is support right here, and anywhere down even into this level, and you can see there's a little gap here as well in the chart that's really getting filled right here on the 60-minute. So another key level right there of support right in this range. We break this support, you could end up coming back into this level right down here. And again, we can cover that in a future video or in the Research Center, those of you that want to join up. But nonetheless, the technicals will tell you everything. Now, one thing I also want to point out, folks, is you're also dealing with some key levels right here. So not only is this a great support line based on this area right here, but you can also draw a line from the low here to the low here. Where does that come to cross? Right at this point as well, which is another signal why you came down to that level and where there's good support. Again, if we break this, you could easily have a fall down to this 200 moving average, which would also line up as a key support line, which we had drawn on the intraday, and you can see it showing up right there, right in this level. The 200 should curve up by that point and meet right at that point as well. So there's going to be a couple key interesting support lines right through there, but nonetheless, those are the ones I wanted to point out. Again, look at the resistance lines, guys. We're at a key resistance line on the upside. Look at this. I mean, going on the 60-minute, it's so clear to see. I want to flip out even further. Let's go to the 120. Actually, you know what? Let's go to the 300. Let's expand it even more as the video comes to a wind down area. Notice the resistance line, I just drew that in up there. The support lines, also guys, just draw this line in here and you can expand it even more. Where are you coming into? Right at that level as well by connecting this area right here. Also, you can even expand it down to this point down here. Alright, you can see this area right here is a key level. So nonetheless, my point here, folks, is be ready for a quiet week to summarize, but watch these key supports and join the Research Center. Join the webinar coming up on the 3rd of January. You'll learn all this stuff, how to track this market. Have a wonderful, wonderful last evening here, and a good luck trading, folks.